Hey there, Safi Russell here, founder and CEO of SDR Consulting Inc. Today, I want to talk to you about quarterly taxes. Now, there are a variety of different taxes that are filed quarterly. So I want to first start with that. You have estimated tax payments, which can apply to you personally and also potentially your business. We have quarterly payroll tax returns that are filed for people who have employees. We have quarterly or monthly sales tax filings, sales tax returns for those who are subject to sales tax, and a plethora of more quarterly options out there. So it's important when you're discussing with your accountant, when you're discussing with colleagues, to clarify what quarterly payments that are being referred to. I'm going to talk about the quarterly estimated tax payments because there's a lot of confusion surrounding that. So first, I want to mention that most businesses are structured where they flow through or pass through to you personally. So if you're a sole proprietor, if you are an LLC, you're the only member, you're filing a Schedule C, which is part of your personal tax return. So ultimately, the tax liability is determined on your personal return. If you have a business that's taxed as an S corporation, you're going to receive a Schedule K1 that's going to flow into your personal return. So once again, the income is flowing back to your personal return. That's where the liability is. There may be some state or local taxes for the business itself that may involve quarterly estimates as well, but a lot of it is mainly at the personal level. Same thing with a partnership, multiple member LLCs, the K1 is flowing back to the personal return. The C Corp is a separate entity that pays its own taxes and could also have its own quarterly estimated tax payments. The purpose of quarterly estimated tax payments is for you to prepay what you expect to owe. The governments want their money throughout the year, just like they would get it if you were a W-2 employee out of every paycheck. They don't want you to wait till you file your taxes in April and pay all your money at that time. If you do, then you'll be hit with extra penalties and potentially interest for not making your quarterly estimated tax payments. So if you're expecting to owe more than $1,000, for example, specifically with the IRS, and you didn't meet the criteria to not be charged an estimated tax penalty, you may be charged an estimated tax penalty along with your regular taxes. How do you pay estimated taxes? You want to know your numbers during the year because that's going to determine how much taxes you owe. And you're pretty much estimating how much you owe throughout the year based on how much you're making or expected to make. You're then going to make a payment to the IRS as well as the state, if that applies, based on what you believe you're going to owe, and split it up over 4 quarters, right? So right now it's July 7th. And for this time of year, the third quarter estimated tax payment is due September 15th, okay? What you would do is figure out what your tax liability is going to be for the year based on what you've brought in. You want to take out anything you've paid in already in estimates, if any, and then you want to make a third quarter payment. That payment is made under your personal account. It's attached to your Social Security number for the individual estimated tax payment. So you can go on your irs.gov account. You can go, you can mail in a check with a voucher. I prefer online, but you're making that under your personal name, not under your business name, not for this, not for these purposes. Not for your estimated taxes, okay? Not for your estimated quarterly taxes. So you're making it under your individual name attached to your Social Security number. Yes, it is going to be factoring in your business activity, your business profits, but it is going to also factor in anything else. If you're married filing jointly, if you have multiple sources of income, if you have children, dependents, tuition credits, all of that's factored into your tax liability. That's why it all gets combined to determine how much you should pay in your estimated taxes. So I just wanted to make that clear. You're paying your estimated quarterly tax payments under your personal name. It is going to factor in your business, but it also factors in everything else that you have going on in your tax profile. How much you pay in, the only way you can determine that, other than guessing, is to definitely work with a professional to prepare that quarterly estimated tax projection for you each quarter. Okay. One other thing I want to mention when it comes to S corporations, because there's some confusion with taxes there. You're paying yourself as an employee of your company. You should be paying yourself a reasonable wage. Whatever that number is, taxes are being withheld based on how you filled out your W-4 on that amount you're paying yourself. However, if your company still has profit left over after paying you, which hopefully it does, there are no taxes being taken out on that amount. And so when that amount flows to your personal return, it's like you received it free and clear all year and no taxes have been paid in on it. So even if you have an S corporation for tax purposes, you may still need to make quarterly estimated tax payments, or you need to adjust your W-4 so that more taxes are taken out of your check to account for the extra income left over in your business after paying yourself. So I don't want to get too detailed with that. If you need support in this area, feel free to connect with me, comment below next steps. I look forward to sharing more with you, and take care. Bye-bye.